everybody. Welcome back to Mortgage Ballers. This is Rich Hanlin, and today I have Mr. Ryan Beckett. Ryan, how you doing? And thank you very much for being with me today. How's it going today?
Yeah, I'm doing well this morning. How about you?
I'm doing well as well. Where am I talking to you from?
So I'm typically based out of Columbus, Ohio. I'm actually up at my parents' house right now in Findlay, Ohio. So
Okay, Ohio. I think we just got that license about a year. It was one of the later licenses that we got. It was actually a harder license to get for some reason. We have a lot of people that do VA loans up in Ohio. Now, are you licensed in any other states besides Ohio?
yes, I'm licensed in just about every state on Xpert's list. There's a
Wow. Okay.
couple that just weren't worth it, but I've got maybe 38, something like that.
That would probably make you one of the top licensed people at the company. I know Brittany has 43 of the 44. She doesn't have Nevada because they're giving her a hard time about location. I have all 44, soon to be 45, because we're going, but it's really not another state. There's two licenses in the state of Indiana. One is a W-2 and one is a 1099. And we found that out. So we're like, hey, let's go after the 1099 one. And then if people want to get the SOS, they can do that and go 1099, because we have about 14 states that we pay 1099 in. So, we try, and when we find out these little things, we try and add that value back because we want you to have that option. Here's what's funny, Ryan. People think, oh, you guys trying to not pay taxes. And I'm like, no, you understand these people generate their own business out of their own pocket, and using those gross dollars to be able to do that versus net dollars as an independent contractor is totally huge. So, I
Yeah,
bet
with the way we're set up, 1099 is what's more appropriate. I mean, you're covering
you're
expenses,
independent.
you're
I
doing
mean,
everything out. Yeah, you're independent. Call it what you want to call it.
you're no different than a realtor the way it's set up. I mean, just certain states, they just want to drive the revenue. But hey, you never know. They're talking about maybe trying to get rid of those income taxes, and it ain't going to matter anyways. Because it's like, what do you care how I pay if there's no income taxes? But I guess that could be on the federal side. Ryan, how long have you been in lending?
So it's been about 8 years now.
Okay.
First job out of college, and kind of bounced around mostly in the operations side since then. I started off just as I was a call center person at first, making the 300 or 400 telemarketing calls a day, just trying to get people
Woo.
connected with a loan officer. And then opportunity came up to move into the ops department, and I started as a credit analyst, just doing like file setups. Moved into processing after I had learned enough, and then from there ended up actually moving up to being an operations manager.
Okay.
Most of
You've
my
done a
career
lot of
has been
things.
spent, in various aspects of processing, closing, some underwriting support.
How did you come to expert home lending with that kind of a background? Because that's not the normal background that ends up at expert home lending.
Yeah. So a couple, colleagues that I'd worked with at a few different places in the past, that mostly I had processed for them. They were looking at Xpert as kind of their new home, and the whole deal when we started is that I was going to help run their ops for them, and then be able to run all of my origination business on the side as well, because I was kind of tired of having to refer those deals out. I get a friend or family member that wants to do something, and it's sure, here, talk to this other person. I'll still do most of the work of closing your loan and processing it and collecting everything from you. I just won't get paid on it. And so I kind of decided it was time not to do that. Linked up with those guys, and since then they've actually haven't really gone active yet. I've just been working with a lot of other expert loan officers processing their loans. So at the moment, there's about 8 of them that I'm handling, and that's really helped a lot with learning some of the ins and outs of the various products, some of the different broker portals. Like I'm starting to get a taste of DSCR, construction loans, bank statement loans, all the things that I didn't really see so much just in the direct lender, correspondent, but delegated underwriting kind of world. So,
I like it.
yeah, it's a little bit different probably than most of the other loan officers you're seeing here, just because basically I like the stability of ops and being able to have some consistency, and again the knowledge base that comes from that, and then use that for any customers that come my way, which to your point earlier, social media has been huge. I'm learning a lot off of these high producers that I've got that I'm working for, and it seems to be that the name of the game is social media.
anymore. Here's a good thing. So I started September 1st, 1991 as a loan processor in the industry. And I'm glad I came in that way because back then the loan officers brought it in and then you took it and did everything. We actually found the loans, we sold the loans, we closed the loans, we knew the underwriters because licensing was different back then. Pretty much the broker had a license and was responsible over everybody. So anybody could quote a rate under that responsibility. And if they were employees, not independent contractors. But I learned before AUS how to put deals together. I had to learn how to talk to people. I had to bring the bad news to people because loan officers bring everything in. I would learn to analyze it, and then I would have to take them from what the loan officer told them to get them in the door, the shiny apple, to the reality of their situation. And I got really good at that side of it, transitioning people to where really we could get it done, but with a plan that, hey, we used to have a lot of 2 and 3 year fixed rate loans that at a subprime or non-QM lender that you could get close to a Fannie Mae rate. It just wasn't 30 years fixed forever. And of course, everybody wants that stability you talk about, but we could start a plan. This is going to be a 2-step loan. I'm going to get you here. We're going to solve this problem. You're going to make 6 payments for me or 12 payments, whatever back then the lender would require. And then we would season that loan and then we'd turn around and get them to the next step. Many times that worked, but sometimes borrowers, you'd call them up, they'll say, yeah, I got back in the habit of not making my payments. You're like, oh my gosh, we just did all that. That's where the 2 and 3 year fixed, it's like, okay, well, we got another year, but after that, it's going to adjust. And those first adjustments on those loans were big, could be 3 to 5%. We all know what happens when those kind of things happen. So it was short lived, say it that way.
I still think though, sorry, real quick.
No, go ahead. But you said something about people. So you came over. I want to make sure I clarify that. So are you working by yourself with the possibility of a team coming later that you're going to be part of, or are you on a team right now?
So I guess I'm part of several teams, really, when you think about it. So there is a group out in California. There's 5 of them in one office, and I'm doing things for their whole office. I've got a different single guy at the moment down in South Carolina, but he just brought in another person who's working on licensing, kind of getting him trained up as a loan officer, and then a couple other just independent. They're by themselves. No big office or team like that. So originally my plan was to be with the 2 other guys in Ohio here and potentially get 1 or 2 more people that we knew in, just depending on, if their life situations worked for that. But I think they got a little bit of cold feet at the market that we're in. And I said, no, like we're doing this. And so kind of just had to make my way. And I figured, well, while I'm trying to work on the marketing aspect to get, social media's active, get more realtor connections, processing loans is going to be a great way to learn all the systems and to get a steady paycheck in. So I definitely like that it's all internal with us too. It very much helps with having access to all the same systems and just that brand consistency as well. If I'm reaching out to somebody, they see the same email address, the same company name as a loan officer. So I think it helps with, providing credibility and support for each other that, we're all on the same team. The people don't feel like they're being third partied out.
Absolutely. These are great conversations. But I need you to dispel a myth about Ohio. I watch a lot of investment channels, and lately I've been seeing some investment YouTube channels where they're talking about Ohio. There's certain areas in Ohio, and they're like, hey, I don't want you to think you're going to hear the price. I'm paying $99,000, $95,000 for these 2-bedroom, 1 bath in these neighborhoods. And he's walking down the street. He goes, these are nice homes. They're not, these are hardworking people. This is not trashy. And I'm doing DSCR loans and I just bought 4 of these houses. He's from Texas. And he's like, he ventures out where the value is. And I was amazed at the monthly rent was still like $900 a month, even on that house. I mean, that ratio was huge. And I never thought about the Ohio market. You're right in the middle of it. Obviously outside the snow.
Yeah.
Do you see that as well?
Yeah, it definitely depends what part of the state you're in. So like I mentioned, I'm in Columbus typically, it's where I live. And down there, I mean, you can still get rents that cash flow. It's not bad, but the prices are a lot more similar to what you'd see in the rest of the country, versus like in Findlay where I'm at now. Actually, I had bought my, I guess technically second rental up here. It's a 3 unit that I paid 110,000 for. Mortgage payment on that right now is like $812 a month, and I pull 1,900 in rent.
Wow. So
So,
you actually
and
have
that
some
place
rental
is
properties.
beautiful. Yeah. Yeah, I've offloaded everything but that one. That 3 unit has been probably the best decision I've ever made. Bought it, primary residence with an FHA loan, 3.5% down. So I think I came up with like $6,000 with the closing cost all in, and here it is now cash flowing $1,000 a month.
That's awesome.
Yeah.
That's a great story. I hope people understand that, so many of us are in this business and we help so many other people achieve those things. And I'm thinking you become much more interesting to talk to in your variations of conversations and confidence in your conversations, the more things that you personally have done. Are you a homeowner? Do you have any rental properties? Have you tried any of these products that you're trying to sell to other people? Um, until I became an investor, the people that did investments kind of shied away from me a little bit.
Yeah.
Once I got into it, now I'm mostly that's all I do is investors, but it's gone even a step further. My California investors will reach out to me and they say, Rich, what do you got? Because I've introduced them into properties that have better cash flow. And it's like, hey, here's a DR Horton home in South Georgia. That same home is, so it's 220 in California where you live. That same model is 625. You're thinking about buying that one at 30% down, but to break even, you're going to put 40 to 50%. Take that same money, we can get 2 or 3 of these, and you can go minimal down, and you're going to be positive cash flow because this is what the rents are on that. And just having eyes and ears and feet on the ground, their realtors will call over, they'll get a referral fee, but they're like, Rich, without somebody there, I never would have thought about venturing outside of my state to see something. I'm buying, these guys are buying houses sight unseen because they still get the same, inspections and things like that. I have rental properties that I've never seen before. Give me appraisals, give me pictures. I don't need to see it. And I have a property manager running it. I don't want to. I used to try and be a property manager, but I'm the worst. My wife's like, Rich, you let that person not pay rent. Oh, they're having a hard time. It's like, well, we're all having a hard time. And these people would tug on my hearts, and I'm like, okay, I'm horrible. I'm
Yeah. Well,
always like, no problem. I'll come mow the lawn for you. It's like, stop, Rich. I've separated myself. It's not the best leveraging of my time. I hired a property manager and it still cash flows with them 100% handling it for me. Everybody's different on that. Do you have a property manager or do you handle it yourself?
now, say I handle it myself. That's actually the whole reason I'm in town right now is I need to go
Okay.
over there and fix a leaky toilet. So, yeah, that's the kind of stuff that pops up. But, overall, I guess to, one of your other points of what I do in my free time, I do a lot of, property improvements. I've done a couple flips now, helped a friend that bought one about a year ago, and we tore it to basically studs and did everything in there. So I like to be involved in pretty much all things real estate. It's not just necessarily the financing of it. I
Absolutely.
think
That's a
getting to
great
see
way
that
to do it.
physical transformation is kind of big for me. But then it's nice when I'm doing, stuff even in my job here where, we have concerns on an appraisal maybe, and, borrowers trying to figure out how can I fix this? Do I need to hire it out? What's this going to cost? Can look at it and like, hey, you just need to do this quick thing. You really don't need to hire this out. This will get you through what we need to, get you to the next step. And I think having the experience of doing that with your own hands gives you some insight to, is this something that a typical person can manage, or does it really need to be somebody who's got more of a feel for that kind of stuff? And if they do need to hire it out, are the quotes they're getting crazy? Does it seem like they're, getting the short
They
end of the
usually
stick
are.
here? Yeah, you're right. Definitely seen a lot of bad ones. But I think that having that insight there has been valuable for pretty decent amount of clients. Again, typically when they've got some kind of repairs needed, or if we're like I've had a couple people that are going to get new roofs. I see the quotes. I'm like, I mean, roofs aren't cheap, but they're not that expensive either. And that I think that outside push into go get another quote, go talk to somebody else. That helps a lot with both on our end and on theirs.
No, I agree. Hano Yadigar, I interviewed him about a week ago, and he started his own construction business. And his dad and some of his dad's friends know how to do all that stuff. So he got the general contractor's license there in California. But he's like, you know what? He does a lot of first time home buyer stuff like that. And the properties come back with needs. And he was seeing the quotes and he's like, we could get that done faster and cheaper, and we're okay with getting paid out of escrow when it closes rather than trying to get someone to pay for it up front. And he started that about a year ago, but he's like, that has been a big deal. And it started a whole nother avenue because he's like, I do all these loans and they all just have something little that needs to be fixed. And then after the fact, if they run in something, if we do a good job, they'll call back and say, hey, can you guys do this, this, this? And it's a lot of handyman work. But I was like, hey, that's a great idea. He doesn't swing a hammer, but he knew someone who did. Now, in your case, you have that ability, or sound like people. But the way you're diving in, that might be a consideration for you to help control that, because that is a powerful add-on value that we sit now and save our customers money. It's if you guys want to buy a house that has needs that to get it closed, we can help you get it closed for about as cheap as it is, and we're going to make it as simple as possible. We are a one-stop shop. It's not Expert's not swinging
Yeah.
hammers, but I'm just saying from a Ryan standpoint. Now, but I mean, all right, let's be honest. That's your hobby, is flipping houses. Come on, you got to do something else. When there's no loans, what does Ryan do?
Yeah. I mean, generally speaking, I'm gonna say mostly just your, TV, video games, hang out with friends.
Okay.
When it's nicer weather out, we like to go disc golfing. That's
Oh,
kind of
all right.
the outdoor activity. So, basically, daytime it's gonna be that. Nighttime, TV and video games.
Okay, right on. I appreciate the honesty. Let's see, we've had a singer, we got a Rubik's Cube champion. We have someone starting a construction. Had a person that him and his wife adopted 4 kids. I was like, wow, I didn't know that. And they're young. And I'm like, wow, 4 kids alone, let alone that you have the heart to adopt. I'm like, I mean, that's what makes people real.
Yeah,
So many
that's
people look at,
crazy. We just had a baby last year. He turned one
congratulations.
about a week ago. So that's kind of been our new thing. But oh wow, I can only imagine four. I mean, one has been a ton of work.
Well, I'll retake that. If you just, I know what you've been doing for the last year, then no wonder you don't have time. Good Lord, if you still have time to get outside and do disc golf in that first year, then that means your wife's probably upset with you. Because man, babies, you disappear for almost a year when the first baby comes along. Second one, you're like, yeah, I've been there, done that. You'll survive. I'll take him out on the disc golf. We're going to do it together. He'll be fine. What kind of loans, if you had to choose? I mean, you're processing, but you also do loans. And a better idea would be this. I talked to somebody the other day in Orange County, a first time home buyer is $1 million. I talked to somebody yesterday morning in Michigan, their first time home buyer in the area they're in, it's $240,000. I talked to somebody in Arizona, it's like 650 in that Phoenix Scottsdale area. Now of course, it's areas you're in. What does it take to get in as a first time home buyer in Columbus or the areas that you see and or talk to people in?
Yeah. Um, I mean, Columbus is definitely pretty diverse there. If you're just looking for any home, you don't care so much about the schools you're in or, overall what neighborhood. Um, I mean, you can certainly be in at 150,000 would get you something passable. I mean, actually, I had that deal that I did with my friend. He bought that for like 120. Now we've put $60,000 into completely gutting it and redoing it. But the house was livable as is before, maybe a little bit of cleanup, but it's definitely not the most desirable neighborhood. The schools are so-so. So it's probably not a long-term play, but it is something to get into home ownership, be able to start, getting some equity appreciation and, take some of the other tax benefits associated with it. Versus if you want to get into what I would say kind of like your mid-tier neighborhoods, probably more around 250 to 300,000 would do it.
That's crazy.
Yeah.
Mid tier is 250 to 300,000. Georgia's been doing that. I bought my first rental here for 156 to December, like literally 30th of 2019. That same house, it was like almost brand new, but that same neighborhood, it's like 225 to 240 for that house now. So it's gone up. It's not huge appreciation, but I'm happy with it. I get good rents on that one. It's by an Air Force base. So I get a lot of officers that will rent because they want the school, when they go there. You're pretty diverse. I'm glad we had this conversation. I don't think people understand how the depth that, if they, so many people say, oh, it's a loan officer. I don't want to talk. They're all the same. It's like, no, they're not all the same. There is depth to some of these originators. And I think that is one of the biggest things I'm trying to point out is to say, we need to change our websites to say, these are all the things of who I am and what that I do. And people say, rather than I'm a loan originator and I can get you the lowest rate, because they all say that. But you have depth to you that so many people could relate to, which is awesome.
Yeah. And I think kind of to the point you were making there about, oh, I'll get you the lowest rate. Sometimes that's not even really the best option for them. That's, some of the conversations that I like to have are, for instance, I closed somebody with us a couple months ago that they bought the home that was like two houses down from their existing primary because they wanted to downsize. But we were just getting a lot of flack for the address on it and occupancy concerns. And we were told, hey, you need to do this as an investment property because it's too close. It's smaller in size. It ticks all the red flag boxes. And so I had to have that conversation with the borrower, but then we pivot to, okay, so what's our longer term plan? Because we know you're selling this other home. They're scheduled to close in about a week on it. And so when we did their first loan, it was, hey, let's take the highest rate possible, have zero closing costs in here because you're going to turn around and refinance this in 6 months. It would be nonsense for you to pay a bunch of closing costs just to turn around and wash all of that away when you refinance this loan. So, I was able to have that conversation with them that, hey, listen, I know this is scary that we're jumping from the 6.5 we had you at up to an 8%, but this is what's best for you in the long term. Now, like, luckily, that was a client that came from our mutual financial advisor. So somebody who, already had a level of trust for me just through that association. I think that it was kind of counterintuitive. You're telling somebody, hey, I have to take your rate up a little bit. So the correct response is to take it up even further. Definitely not something that I think most people are thinking to do. Generally, if I hear a situation like this, it's okay, well, bury a bunch of points into it or something so you can still show them the same rate. It's like, but yeah, why would I do that? They're going to pay all of this and get no benefit for it.
Yeah, no, I agree. To me, a mortgage is just a tool in my toolbox. A lot of people don't realize, but I'll refinance my properties every 6 months in one day. I take high rates and they say, well, what are you doing? And I'm like, well, it's legal for me to do it. I'm not creating EPOs. The lender pays all my fees. It's usually I try and coincide it with insurance and or property taxes so I can try and get those added in there. And I keep a lot of PI payments only. The other part, sometimes there's even cash over and above it, and I'm my own loan officer, and that's totally legal to do. But I only make 10 payments a year, not 12. And people are like, well, what do you do with that money? I take that money and I pay it down on the principal in my house with the very next first payment on the loan. They're like, well, how do you get benefit and value? Well, a lot of people say like, oh, you always go on 30 or fixed. No, sometimes I'll jump from a 30 to a 25 down to a 15, back to a 30. I'm just always moving it around. Whatever gives me the most money to cover closing costs, the taxes, and the insurance, I'm using the lender's money. And it's legal to do that. It's not churning. Churning is when you EPO yourself to keep getting people going and charging them fees that they're paying. In this case, it's in the rate. I'm not paying a bunch of money out of my pocket. You get to an equity position that many times you don't even need an appraisal. You literally can just keep doing it. Now, the rental properties with the DSCRs, I do run into appraisals on those, but I like the DSCR loan because it's much simpler. But UWM allows me to be my own loan officer. As long as I don't create EPOs, they're not getting hit for it, and it all works out well. Where it doesn't work is on a $99,000 loan in Ohio.
Yeah.
It helps to be up around that 200 or 1,000 mark or higher. But some of the properties that we have, it could be a five, six, $700,000 property, and you can more than pay your fees, and you more than can cover the taxes and the insurance. And it's just something that I've done. When I do loans, sometimes they see pages of paid off mortgages, and they're like, "What is this?" And I explain to them, they're like, "I didn't know we could do that." Now, people are going to hear me say that, and that's for a whole nother video because they're like, "I didn't know I could do that." I'm like, "Yeah, imagine you had 10 properties and you refinance them twice a year. That's 2 loans almost per month that you're doing for yourself. And by the way, all the extra money I do, originally I paid off my personal debt, but after the personal debt was gone, we would take any extra money we have and we pay it down on the mortgage. So now we're using the lender's money paid to pay back on the mortgage. And here's the best part, Ryan. I'm going to blow your mind. I am the borrower. So the commission on that transaction, I take as zero to myself as a loan originator, and I give it back as a borrower reimbursement to me as the borrower, which is free because it was built into my rate, non-taxable.
Yep. See,
People
I
are
like
like,
that.
what in the heck are you talking about? Well, people, I do it all day long.
Yeah, I think you've got a similar mindset to how I am of, okay, how can we read some guidelines, kind of manipulate them around without breaking it and get the most effective result? I mean, for instance, on my own personal side, so that 3 unit that I had mentioned I bought that it's February of 2019.
Good year.
And around October of that year, I did an FHA streamline on it, just lower my rate a little bit. But while I was in process on that streamline, I found another single family home that was like, I need this. Best or probably second best neighborhood in town. It was a guy who had died, so the house had been sitting empty for 6 or 7 months at that point. Tons of deferred maintenance, but overall, I mean, it was the worst house in the best neighborhood.
Right.
And so I was like, I need to make this happen. But I was looking, it's like, but I did a primary residence already in February of this year, and here we are sitting in October. I'm like, oh, this doesn't quite work yet. And does my current refi that I'm working on now jeopardize that? So I went through and pulled all of the documents out of my original loan and out of the one I was working on, start reading up the occupancy certs. And it's okay, I need to occupy for a year from my original occupancy date. And even on the refi, it says from original occupancy date, not from, the date of that refinance. So I'm like, okay, I'm good as of February 19th of the following year. Then got in contract on the single family home and structured that one so the intended occupancy has to be within 60 days of closing. So I structured the contract to not close until December like 23rd or whatever my 60 days was there. Have 60 days to work on some repairs on the new property and then move into it on the same date or one day after my year was up on that 3 unit. So that was, very careful reading through all of the documents that I've signed, all the guidelines, and all right, how do I make these dates work up to make this happen? And that single family ended up being an awesome purchase. I did very well. I mean, I bought it for 260, put about 100,000 into it, and sold it for 450. So it was definitely a great decision, and the only reason I was able to make that work was through that careful understanding of exactly what all the dates were on it. And I did those loans at my former employer, and they had actually called me out of like, hey, you just did a primary residence loan and you're trying to do another one. What's up here? And I pointed all that stuff out to them, and they said, oh, okay, you're right, let's close it. Which again, I just think that had I not had some of the industry knowledge, there's no way I would have thought to put that together. And those are the kinds of deals that I like to be able to put together for clients where, again, how do we toe the line without crossing it?
Well, and a lot of people, they think that they have to try and manipulate the system. It's like, if you know the guidelines, you could buy another primary property every 1 year and 1 month. You could start that transaction prior to that. You just don't close on it, and until that way you're not shorting anything. Um, but I'm amazed at how many people attempt to manipulate the system just for a month or two, trying to buy the property on the same street.
Yeah, it's
It's
like,
like, really?
yeah, if you're just a little bit patient, you don't even have to do all that. The occupancy fraud always killed me. Like, of all things, why that? The
I agree.
easiest thing for somebody to check up on.
We have seen it more in the last 3 years than I have in the prior 33 years, 32 years, 35 total. Yeah, 32 years. I've had more occupancy fraud because of the rates. And there are certain areas where it takes multi generations to buy a house. San Jose, California, Livermore. They've got to have multiple generations just to pay those prices and make it work. And so, you're like, wait, but they just bought a house. Your parents just bought a house, but we need their income to make this work. Yeah, but my dad's not doing very well, so he's going to hang out with us during. It's like, okay, that could be real, and sometimes it is, but I'm like, how convenient is that? And it's just red flags. It's all red flags. So anything that's a red flag is going to have to be discussed. You might as well have think about the red flags before you submit the loan in and deal with them on the front end. Don't wait for an underwriter to say, by the way, there's a red flag here. It's like, oh, really? Because then it seems like you're trying to hide something. Kind of crazy.
Yeah, yeah, exactly.
Here's a
You
question
made a
for
good
you.
point
I'm
though with
sorry, go ahead.
the multi-generational housing is I personally think we're going to see a lot more of that, and mark my words, but I think the 3 and 4 unit properties is going to be perfect for people like that. You want to go in together with your parents and your sibling on a fourplex. Great, everybody gets their own unit, rent out whatever else you don't have for yourself, but you can still share one mortgage, one approval, and kind of get the best of both worlds there, that you get your own space, but you don't need to be able to completely qualify for that space on your own.
Yeah. Tell me this, in your area, everybody's sitting on a fence somehow, some way. And it's different based on the market you're in. But if someone's sitting there, whether it's a person sitting on a low rate for a refi, but they have equity that could help them, they built up debt, or someone who's sitting on the fence waiting to buy because they're waiting for the rates to come down. What kind of advice do you give to people as you're talking to people out there, with your conversations when they're on that fence?
I would say it's looking at the whole picture, because usually if you're just looking at, let's say you're renting and, okay, do I buy now or do I wait on rates to come down? Well, what's the interest rate on your rent? 100%.
Somebody said that the other
You're
day. That's
getting
actually
nothing
100%
there.
true.
And then even then, they're not considering things like the tax benefits. Are you buying in a high interest, high property tax area? Well, even if your rent was 1,500 and your mortgage is going to be 2,000, we might be able to save you 200 or 300 bucks on your income taxes to really start to offset that. That's not something that people necessarily feel right away, or maybe they need to be coached. Well, here's how you figure out what your tax burden is going to be. Now let's go to your employer and get your withholdings changed to match that more closely, so you've got that money in your budget each month to account for that higher payment. Because I think that, like, I've heard the interest is 100% rent thing before, and I'll hear people talk about, say, the tax benefits, but they don't really actually go through and calculate it and put hard numbers behind it. And that's, kind of my advice to people, is to go through, learn how to calculate it and put hard numbers behind it. And suddenly I think it feels a lot more realistic when you say, okay, well, rent was 1,500. I'm looking at a $2,000 mortgage. I'll save, $200 or $300 in taxes, and then I've got the appreciation and the mortgage pay down. Now all of a sudden that mortgage is probably a little bit cheaper than my rent, or at least about the same when it washes out, for probably a better space overall, an area that you like, or just that peace of mind of knowing that you're working towards something bigger, that paid off home, hopefully by the time you're retired.
No, that's great advice. I appreciate it. I always want to ask, Ryan, I mean, obviously you don't know much about me, but you have me to yourself. Anything I can answer for you, any questions you might have for me. And if you don't, you don't. But I always like to make sure I throw that out there, that I'm open to answer anything that anybody maybe wants to know about me.
I guess I'd just like to hear generally any big plans for Xpert, whether that be, new states, products, anything that's, kind of sets us apart. I think that, like, being able to both broker and do the correspondent loans with UWM, that sets us apart a lot, having, that full level of control that we do. So just interested at any other, things like that we've got going.
Yeah, no, that's a great question. A lot of people ask, why don't we have more correspondent relationships? Because they like that side, and I don't blame them. I like that side too. The rules are different compared to the broker world, and we get to, we get the benefits of a lender side and the broker side. But here's why we don't. A lot of people don't realize this, that UWM, first of all, their platform's the same. We don't have to go to a third party to disclose a loan. You go in there, you just toggle the button, and it's either disclosed in my name or their name. But more important, when they give a clear to close, they've already pulled and verified employment and income. And we have a guarantee from them that if we fund that loan after a clear to close, they are going to buy it off of our line, clear the line. And I mean, we got $3 million loans sometimes. Most other lenders that we want to deal with that have the systems in place to handle the volume that we can do, because that's another thing too, that complement that and would be a good add-on, which we have a couple that we're always talking to and trying to figure this out. They can give clear to close, but right before they buy it, they recheck the income. And people are like, well, what's the big deal? Well, probably 2 to 3 times per month, not per year, per month, people will all of a sudden find out that they stopped working. They got the loan, they signed, and they never went back to work again. They didn't tell us that. Or they opened up a company and were no longer W-2 and they finally kicked the switch, or they just retired, something like that. And that would be stuck on our line as an unsellable loan. And we are vulnerable from clear to close where everything was fine. There's no way for us to prepare for that with a borrower who's not truthful,
Yeah.
or had other intentions. And so we haven't quite worked that out, because you can negotiate those things. So volume, how much you have in volume, can negotiate those things. And we're working on those things with a couple of our various lenders, having those conversations, because it has to work for them too. But I have people that say, "What? I'd love to be core with this lender." I'm like, "Great. Do you know there's only 5 people in that office? If you slam them with 100 purchases, you'll miss every one of your closing dates."
Yeah.
Years ago,
UWM's definitely been
no, they can
way
scale.
better than
That's
the
a big
rest.
deal. The
Well, and
ability
now
to
that
scale as you scale, that is huge.
Well, and part of what I'm doing with, processing for the others is I'm really seeing the bulk of files. I mean, I've got like 40 loans right now in, one
Wow.
form or another. And so I'm in UWM, I'm in AFR, I'm in Village Capital, I'm in all these
You see
different
the
places.
difference.
And you can see, I mean, it's night and day difference of, just the portals, the tech, for instance, if I get a new file and I need to get it registered and disclosed, UWM, I know I can be in and out of there in about 10 minutes. The others, a good half hour at least. And when you start to multiply that out by, 20, 30, 40 files, that adds up fast. So, like I spoke with Alicia a week or two ago, and she, kind of mentioned how that was, really Xpert's push is to try to do everything we can correspondent. And I totally see why. It'd be awesome if we had FHA, but I know there's a lot of weird rules with them and correspondent.
Not if we're going to pay 1099. As soon as you fund a
Yeah.
single FHA, you become a funder of HUD loans. Then no matter what you're doing, everybody's got to be W-2. If the industry tomorrow said that 1099 independent contractors aren't available, that'd be an easy go-to. We'd immediately do it, because you can still have that relationship as a broker. You don't have to become delegated, but they, like UWM, you can still do a correspondent relationship under FHA, but you're still funding it on your warehouse line. So, these are great questions, because these are deeper to the business side that people don't realize. They're like, why don't we do it? And it's like, well, we fund billions of dollars of loans, and warehouse lines have to be rolled 2, 3, sometimes 4 times in a month. You don't have $1 billion warehouse line. You have 40, 50, 150, 250 million. And when you guys are doing, 600, 700 loans a month, you guys clog those lines up.
Yeah. Well, and you're
And
paying what,
we
probably
have
2.5
multiple
months of
lines
note
now.
on it. It adds up pretty fast.
It does. It's nobody wants to buy back a loan because no one gets paid on it. And then we have to find someone to buy it, or we have to hold it and service it for a while, then try and refinance it, do some different things. And believe me, now that's a relationship we have with UWM too. All of a sudden, that customer who doesn't go back to work, they call up and say, hey, can you help us out? Well, it looks like they did take a new job, but it's W-2. Hey, let's refinance them and we won't cause an EPO. Let's get that loan off the books and put one that's sustainable that Fannie Freddie will buy. A lot of people don't realize it, Ryan. Fannie Freddie has 5 years to come back and audit and ask for a buyback on that loan. And so sometimes I'm getting these loans, I'm thinking, wait, this loan's like 3 years old. And here's the funny part. I always check my title programs first. Many times I've had those calls and I'm like, you guys know that you don't even own that loan anymore? That guy refinanced 6 months ago. They're so slow in turning that will to get it back and ask. I'm like, no one's checked to see if this is even a live loan. They've already refinanced or they've already sold. And they're like, oh my gosh, my life's so easy. I'm thinking, gosh, you guys been dealing with this for 6 months and you finally got back to me, the broker, and I'm the first one to point that out. Cardinal Finance the other day, Rich, we might have a problem on a buyback. This is a serious conversation. This guy wasn't employed. We're worried that you guys knew about it. And I'm thinking, well, I have no idea if we knew about it. The loan officer says he didn't. Well, but I'm like, why do you care? And he's like, well, because we're going to have to buy that back. I said, dude, that was paid off 8 months ago. Cardinal doesn't even own that loan. Never mind, Rich. Thanks for your time. And I'm thinking, that was a serious call from a buyback part of Cardinal. They were angry. They wanted my time, but I was purposely making it hard on them because I'm thinking, you really don't know that that loan has been paid off and you are demanding the time of the broker and Xpert, and we got to have a serious talk. And I'm thinking, and I knew it. I said, he hasn't checked. That conversation lasted 2 seconds and our compliance officer told him, and we never heard it back again. But that bothers me, Ryan, because that's not a relationship that I want with a lender. So whether some people know it or not, Cardinal's no longer one of our lenders. That is not the partnership that I feel comfortable with as a broker where I'm responsible and I know more about the loan than the person is supposed to be servicing it. I don't like that. So,
And what's interesting there is that, that conversation tells me, yeah, they don't have good tracking, good systems in place. And as I've gone through things
they're
on my
big.
Cardinal was the worst portal that I've been in of all of them. That was hands down the one that I'm like, I told the loan officer, like, never register a loan here again. Like, if you do, somebody else needs to process it because this is horrible.
You have to
Well,
learn it and own it to like it. They're a fine company, and they had Tony Bavacqua as our AE there. Tony is a workhorse, and I trust him with our business. Wherever Tony goes, when Tony left Cardinal,
yeah, that's the guy's at Resi Central, isn't it?
he's at Resi Central.
Yeah, okay, yeah.
So we said, hey, we want Tony at Resi Central. We actually pushed our other person because we weren't using him. Now we use Resi Central because he will go the extra mile. Hayden and Vinny go the extra mile. Krista Doniker, Brianna Harris with Sierra Pacific, Patty Letterman over at Home Express. We have Kelly, I always forget her last name, Kelly over at the Loan Store, Nicole at Kind. These are relationships that we can pick up the phone and call. And there's a few more in there, but there is another 100 of those lenders that I have never spoken to in my life. And we do one loan every 6 months. How much leverage do you think I have? Rich, can you call on my behalf? They're taking forever on my loan. I'm like, who do you think I know over there? What do you think? And you know what one of them told me? Well, Rich, I'll tell you what. When you start sending me more business, we'll make it more of a priority. How about that? And I thought, please finish that loan. And by the way, that's the last loan that we do. It's not up to me to earn your business. It's up to you to earn our business. We have the business. It's up to you to show us why we should give it to you. Because my loan officer can go anywhere they want to go. I'm not forcing them to go there. They chose and they choose not to go to you. That's not a me problem. That's a you problem. All right, we're going deep now. We're getting deep. All right, I've taken 40 minutes of your time. I didn't mean, actually 46. I didn't mean to go that deep with you, Ryan. I know you got a day ahead of you, especially if you got 40 files. You got some people going to be pounding on you here quick. No wonder you were my first call this morning. But first of all, I want to say thank you for partnering with Xpert Home Lending. Thank you for your knowledge. Thank you for an incredible interview with all that. I don't think people understand the depth that's sitting there. And if you want to talk to him about investment properties, flipping properties, he is using his knowledge and his licensing to the fullest. I 100% respect and love that. I always do that. But I want to say thank you for your time this morning for
Yeah, thank
sure.
you.
And I'm glad you're here partnering with us at Expert Home Lending.
Awesome. Yeah, it's been great talking. You have a great rest of your day.
All right. Like we always say when we close out at Mortgage Ballers, stay thirsty, my friends. Take care, Ryan.
Yep. Take care.